Tyler Winklevoss, Kathy Wood, a lot of notable investors, they believe Bitcoin will reach at least $500,000 per coin, equating to the market cap of gold. Would you agree with that possibility as well?
Yeah, I have no problem with that whatsoever.
Very cool.
And how do you think it gets there?
Yeah.
It gets there, I don't think it's going to be as much retail adoption. I think that moves elsewhere within the crypto Web3 kind of world. I think it's actually going to be driven by sovereign wealth funds, large asset allocation, stuff of that type. I think we're only just starting to see that. But if it holds true to its hypothesis that it is a base layer of money, then really it should be for those who accumulate base layer of money, people like sovereign wealth funds, central banks, and others. Because in theory, if that's correct, then it's a less speculative or risky asset, therefore it has less returns over time. And that's okay too. There's nothing wrong with that.
I recently heard that you only hold one Bitcoin now. My question is, why?
You know the answer to this. Generally speaking, listen, I understand there's a philosophy to the space and people want there to be, Bitcoin at the base center of money, and that may end up playing out over time. But my job is as an investor, not a philosopher. And my job as an investor is to look for better returns. So a long time ago, about a year and a half ago, I switched most of my Bitcoin holdings into ETH, and then I bought a basket of alts to get different exposure to different parts of the market, because you don't really know what's going to get traction and what's not. So over time, I continued to reallocate my Bitcoin into ETH. I always wanted to keep a bit of Bitcoin because you want to, cheer for the team as well. But also, the thing that I get Bitcoin maxes hate me for is this is a network and a community. If you are fundamentally awful to people joining your community, people want to leave.
Would you still call ETH one of the greatest trades in the world?
Oh yeah. I mean, I still think risk adjusted, ETH will do extremely well over time. Just because, the reason why it's expensive to use is because it's so damn popular, right? And so, it's like a chain of prestige now for things to be built on, because it is the more decentralized of all of the other layer ones. So it makes sense to me. I think with the change towards ETH 2.0 coming as well, I think that narrative will build over time as well. So I still think the upside in ETH is massive. In terms of market cap, where could it go? It can go another 10x from here in terms of market cap alone. Over what period of time? Who knows?
But for maybe the newer folks joining the crypto space, could you explain why you're so bullish on Ethereum as opposed to the other layer ones? What makes it different?
So the other layer ones may well outperform, but you have more risk in them. So we've seen, for example, Solana got tested over this recent sell-off, and the chain's still a bit clunky. It has its own set of problems. And all of these come with different sets of problems. But in the right market, because they're seeing earlier adoption, the rate of change goes up faster. So from going from 1 billion to 2 billion is much easier than going from 10 billion to 20 billion or 300 billion to 600 billion. So rate of change terms, they can perform very well, but they're riskier. So ETH has that balance of being more risky than Bitcoin because it's less decentralized, we talked about before, less pure, but it still has the massive network adoption that we're looking for, which is the thing that drives prices. And network adoption is just not people buying it, it's people using it and applications being built on it. It's how you connect all the people on the network.
I wanted to pick your brain on this before we get past Ethereum. When you call it the greatest trade in the world, to me that means there's a selling point. You buy it and sell it. That's a trade. Will you be selling the news on ETH 2.0?
It depends whether it goes into the news on a high or into the news on a low. It depends how the price action is. Now, and ETH won't remain the greatest trade forever. Don't forget, I bought ETH, I don't even remember what price. It was a long way ago and a lot lower. So, that's proven itself out. It did 500% last year or 480%. So, you don't have to reprove the trade every year now from my entry price. Will I trade out of ETH into something else? For sure. When? No idea. Or will I just add other tokens, protocols, opportunities, and just keep my ETH holding? I really don't know. I keep it fluid. Unless I see something that fundamentally seems wrong. Maybe the sharding on ETH allows for breakages that we didn't perceive, and it becomes more difficult to use when you go to ETH 2.0 and it takes a while to get it right. Well, maybe things move to other chains for a while, and that's fine too. So it's not a crusade for me. It's a opportunistic investment. I think it's a long-term investment. I don't really think, I've already been in the trade for well over a year. Am I likely to be in the trade for the next 3 years? Most likely. Could I sell out of half of it if ETH's trading at 20K? For sure. And look at the long-term log chart and say, is this price action meaningful or not? It will give you a much better understanding of allocating your assets. A sell-off like this, things start to look pretty cheap compared to their long-term trend. So maybe this is a more interesting opportunity, as opposed to be freaking out thinking, oh my God, what's happening? If it goes down another 20% from here, does it really change the story? No. So zooming out is the most powerful tool you can have, and filtering out the noise. Writing down your own framework is really useful. Why am I investing in this space? What do I think is going to happen, knowing that none of us actually know? And then testing that all the time. Has that changed my hypothesis or not? That's really useful because it stops you doing stupid stuff. And we all do it. Emotion takes over and you forget the reason you did something in the first place. And you buy a token, it collapses. You think, oh God, I just want to clear it out of my portfolio because it pains me every day to look at it. But when you put it on, you said, I want to hold this for 10 years. Well, then hold it for 10 years. And if you can't, then you sized it wrong. So you made it too big a part of your portfolio to hold for 10 years. It's just writing down some of those principles will help people out immensely.